All right, let's dig into Broadcom. This is a company that is just on an absolute tear right now. But what's so fascinating is that it's not a simple story. It's really a tale of two very different companies living under one roof. You've got one part that's just soaring on the AI boom, and another part that's, well, facing some headwinds. So let's break down this incredible contrast, shall we?
And here's why everyone is talking about Broadcom right now. Just look at this. After their latest earnings call, the stock leaped almost 10% in pre-market trading. Now, for a company this big, that is a huge move. It tells you loud and clear that investors were absolutely thrilled with what they heard.
So that leads us right to the big question. What in the world is fueling all this optimism? What did Broadcom say that got Wall Street so fired up? Well, let's get into the bull case, because it is a strong one.
The answer really comes down to two letters: AI. You see, Broadcom is a complex company with a lot of moving parts, but its artificial intelligence division has become this unbelievably powerful engine that's basically rewriting the company's entire story.
I mean, just look at this number, 63%. That is the year-over-year revenue growth for Broadcom's AI chips. We're not talking about a small startup here. This is a tech giant seeing that kind of explosive growth in its most important sector. It's just staggering.
And you don't have to take my word for it. Here's the CEO Hock Tan laying it out. Not only did AI revenue accelerate to $5.2 billion, but he points out this is part of a long-running trend. This isn't just a flash in the pan. They are on a roll, with 11 straight quarters of growth in the bag. That's consistency.
So how are they pulling this off? Well, it's all about their custom AI accelerators, these specialized chips they build in partnership with just a handful of massive customers. They're going deeper with their existing partners, and get this, they just landed a fourth major customer. And that one new client alone has already placed over $10 billion in new orders. Just incredible.
But here's where it gets even more interesting. The bull case for Broadcom isn't just about the chips. They're building this protective moat around their whole AI business by dominating other absolutely critical pieces of the puzzle, like networking and software.
The CEO has this great line, "The network is the computer." And what he means is, when you're running massive AI models on tens of thousands of chips, the network that connects them all is just as critical as the chips themselves. If that network is a bottleneck, the whole multi-billion-dollar system grinds to a halt. And this, it turns out, is Broadcom's superpower.
And they dominate because of their cutting-edge gear. Take their new Tomahawk 6 switch. It helps create these simpler, faster networks that are way more power efficient. Or their Jericho 4 router, which lets you basically link up multiple data centers so they act like one giant AI brain. And the key here is they're building all this on Ethernet, an open standard that customers love because it gives them way more flexibility than the closed proprietary systems that some competitors use.
And the final piece of this AI moat, it's software. That huge, expensive acquisition of VMware, well, it's already paying off. Infrastructure software revenue shot up 17%. This proves they can dominate the entire stack, not just the hardware, but the software that runs on top of it all.
And to put a bow on this whole bull case, look at this number, $110 billion. That is Broadcom's current backlog of orders. It's an all-time high. This isn't just revenue they made today. It's a giant signal that this incredible demand is locked in for the future.
Okay, so that's the bull case. It's powerful, it's compelling, but remember what we said at the beginning. This is a tale of two companies. So now we have to flip the coin and look at the other side of the business, Broadcom's traditional non-AI chip business. And once again, the CEO doesn't pull any punches. He's very upfront about it. He says demand here is slow to recover and that he's expecting a U-shaped recovery. You know, a slow, gradual bottoming out, not some quick V-shaped rebound. This is the anchor we were talking about.
And this slide just lays it all out, crystal clear. On one side, you have the AI rocket ship, up 63%. On the other side, you have this huge $4 billion legacy business, which was completely flat. It's the perfect snapshot of the two stories playing out inside this one company.
So you've got one part of the business on fire and another part that's just kind of sluggish. So what does the company actually expect to happen next? Let's dive into their guidance for the future and a really important piece of news about the company's leadership.
Okay, so their outlook is strong, and it's being completely powered by AI. They expect total revenue to grow 24%. But look at the AI forecast. They think it's going to accelerate even more to 66% growth. And maybe the most important number on here is that last one. Adjusted EBITDA at 67% of revenue. That means this growth is wildly profitable. The takeaway is clear. The AI engine is so strong and so profitable, it's more than making up for the weakness everywhere else.
And then, to top it all off, you get this huge signal of stability. Hock Tan, the architect of this whole strategy, announced he's staying on as CEO until at least 2030. For investors, that just wipes away any uncertainty about who's steering the ship for the rest of the decade.
And that brings us right back to where we started, to the central question of the Broadcom story. You've got this AI engine that is just firing on all cylinders, and you've got stable leadership locked in for the long haul. So the real question for the market is this. Is that AI momentum powerful enough to keep pulling the entire company forward, even with the drag from its older businesses? That is the multi-billion-dollar question at the very heart of Broadcom's future. Thanks for tuning in.